Supermicrocomputer SMCI is trending after a major Wall Street institution initiated coverage with a sell rating, reigniting controversy around the stock despite its leadership position in AI infrastructure. Goldman Sachs assumed coverage of SMCI with a sell rating and cut its 12-month price target to $26, citing concerns that margin compression in the AI server market will persist, even as revenue continues to grow at a rapid pace. Goldman's core argument centers on pricing power and profitability. According to the firm, Supermicro is squeezed between powerful upstream suppliers such as NVIDIA, AMD, and other component vendors, and a small number of very large customers, limiting SMCI's ability to set prices or defend margins. In this view, the company's role as a systems integrator in an increasingly competitive AI server landscape leaves it vulnerable to rising component costs and intensifying competition from larger OEMs. At the same time, Goldman's own analysis acknowledges that the top line story remains compelling. Despite SMCI shares being down roughly 4% in 2025, the firm notes that Supermicro remains a leader in AI server deployments, particularly among so called neo-cloud operators, including companies like IREN and CoreWeave, that are rapidly building out high performance computing and AI focused data centers. These customers are scaling aggressively and represent a fast growing segment of the AI infrastructure market. Goldman further points out that these neoclouds typically have long term contracts with well capitalized hyperscalers, such as Microsoft, which reduces counterparty risk and supports sustained demand. As a result, the bank believes Supermicro could outperform revenue expectations through at least 2028, a notable concession given that the company itself has guided to an eye catching 64% revenue growth in fiscal 2026. This duality, strong revenue momentum versus pressured margins, has fueled intense debate within the investor community. Bulls argue that Goldman's sell rating underestimates SMCI's execution speed, design leadership, and scale advantages, especially in liquid cooled and high density AI systems. Some go further, accusing the institution of talking the stock down to accumulate shares at lower prices ahead of what they expect to be strong earnings and contract announcements. Skeptics, however, see Goldman's stance as a sober reminder that growth alone does not guarantee shareholder returns, pointing to ongoing questions around profitability, governance, and long term margin sustainability. For these investors, the report reinforces the idea that SMCI remains a high growth but high risk name. In short, SMCI has become a textbook battleground stock, a company with extraordinary revenue momentum and strategic relevance in the AI ecosystem, but one whose valuation hinges on whether it can eventually translate that growth into durable, defensible profits.
So the stock is currently down 0.28%. This is Wednesday, the 14th of January 2026, pre-market session. Yesterday lost 5.05%. Let's see. Underlying trend is bearish, and lower prices are expected to continue to print up till the 3rd of February. After that, there is the algo seems to be suggesting that it might pick up a bounce, but it's not to reverse the downtrend. It's just more of a consolidation, and the 40-day moving average is also expected to continue to decline to prevent any meaningful bounce, any bounce that might no meaningful, it's just no sufficiently reasonable bounce. That is what the 40-day moving average is expected to do to prevent any bounce from expanding further. Momentum is expected to remain flat as well. Nothing is expected to come up. Okay. We have maybe towards when it's expected to disclose its earnings outcome. So just after that, maybe That's what the earnings are expected to be disclosed on the 9th. So after that, it seems we're looking at the prospects of a bounce. So 9th is a Monday. 9th is a Monday. Okay, we'll see. And then, but projections are currently saying, let's see what we have. 20.94, 22.56, 25.18 as things stand right now. The probability of it retesting $30.13 that it printed on Monday the 12th is statistically less than 50%. Yeah, let's have a look at its 4-hour chart to see what's going on. On the 4-hour chart, okay, the extrapolation seems to be suggesting that it might remain in this consolidation that it has been on for some time. It's been consolidating since I think that news broke out yesterday. Yeah, as a matter of fact, all through the pre-market session of yesterday. So the extrapolation seems to be suggesting that it might remain in place up till midday today, the that 14th, and then after that, it might pick up and maybe break through its 40 period moving average and remain above it up till the 23rd of January. No guarantee that this will be the case. So higher prices or strength is expected to kick in from today. We'll see how all of that goes. I guess maybe reading the fact that some market participants are trying to speculate that this sell rating is because Goldman Sachs wants to depress the stock so that it can get in, and you can be. I don't think you can rule that out completely. It seems SMCI is not a client of Goldman Sachs, so they would definitely give it a sell rating. If they were a client, they wouldn't. They will frame it in a different way. I'm not trying to say that if they're not performing well, that they will say that they're performing well. If they're not performing well, they will frame it in a more balanced way. So clearly they're not clients of SMCI, but they really fancy the company. Surely, no doubt about that. Okay, so projections here are saying, yeah, 26.45, 27.12, 28.50. Momentum, yeah, is also expected to remain subdued up till up till tomorrow the 15th. Then after that is expected to pick up and remain strong at least up to the 20th of January. Yeah, so we'll see how all of this will go. Yeah, let's see. uh, I will definitely continue to update you. Thank you very much for watching this video.